day all. Ira Epstein of Linn and Associates with your metals market update, and this is for Thursday, the 17th of October, 2019 at 3:45 p.m. Central Time. So as we're looking at the market, gold's holding up pretty good, as well as silver, even the copper and the palladium market. So the question is, where are these markets headed? Well, the day's events were interesting in that supposedly there's a 5-day truce, 5-day, not 5 months, not a truce that's going to last, a 5-day truce that that Vice President Pence and Secretary of State Pompeo traveled to Turkey for and were able to put together with President Trump's help. Regardless of what you think, at least there's a truce in place. Now the question is, what next? Damascus has already said they don't know the particulars. Let's just say the idea here is to get the Kurdish, the YPG forces out of there so that there's a 20-mile barrier that can stay as a buffer zone. Whether it stays that way or not, your guess is as good as the man in the moons. But right now, for the moment, the killing is stopped, supposedly. Okay. The other thing is, you know, the House yesterday condemned the president for pulling our troops out of Syria. It went to the Senate. It hasn't, that I know, been brought to the floor yet. Maybe it will be. But he's done the job of getting that 5-day truce. They may want to pause on that a little bit and see where the political winds blow, so to speak. In terms of economic data, we're still seeing, I think, the slowdown in the manufacturing area. I'd be very cautious right there. The question's now for traders to figure out, what does the Fed do at the upcoming end-of-the-month monetary meeting? Are they going to cut rates again? Are they going to say, well, you know, there is movement on U.S. trade. Do we wait just a bit, keep our bullet in the gun? Who knows? The odds still favor, and I'm talking the odds on the Fed watch page from the CME, that they're going to cut rates. We've been in something of a correction on the weekly chart of closes in gold. You can see you've come from a high close of 1526.60, and right now, if you were to finish the day here at 1492.30, so we've had a break of roughly $30. You can see the sideways action that's been going on in the market. When I put the swing line on it, we still have a pattern of lower highs, but suddenly we have higher lows. So we've got a pause in the trend. It resumes to the downtrend if you take out 1480.40. The trend turns up if you get over 1503. Why? Because that would give you higher lows, higher highs. You're at a very important number right here. Guess what number is waiting for you right above the market? And it's under 1503. 1502.50 at this minute is where the 18-day average of closes, that line in the sand, as I like to call it, sits. So at this point, at least, as I'm recording, you're still in a downtrend. You have a legacy of lower highs and the lower lows. It's pausing. The bias is down. The Bollinger Band low, you hit it the other day and you haven't been able to get anything going from there. Will you get back to the 18-day average is the question, and we're not getting any help from momentum. It's just drifting sideways in the market. So that makes me take a look at where's GLD. Maybe it gives me a better picture. It's not. You got higher lows, higher highs. I can appreciate that. That's an uptrend. But the market settled underneath the 18-day average. So the bias stays down. The two wipe each other out. They're counteracting forces. You're always filtering the swing line with the 18-day average of closes. At least that's what I teach. Then momentum, flat as can be, not of help to me. So what about GDX, the gold miners? Well, they had a good day today. The market had been in a downtrend. It was unable to hit the lower Bollinger Band. It's been fighting at the 100-day average of closes in green and oversold. Today, the market rallies enough to get over a previous high. So it stops the downtrend on the swing line. The bias is still down and momentum's pointing up. So the market's run out of downside momentum. That doesn't mean price can't go lower, but as a momentum, and that's very important, you've run out of it. Now that 100-day average becomes the support, resistance, the 18-day average. I like to see those miners come alive if you're going to have a good metal market. What about the gold-silver ratio? It's pulled right back to where it did the other day, back to that 18-day average of closes. It's not telling us much of a story. If you can get back under that low close that we had just recently, and I'm talking right here when the market closed at 84.56, that would be a sign that silver is ready to gain on gold. What about silver? Well, it's come up to that 18-day average zone and failed. It got, in fact, to 1766.5. What's the 18-day average? 1765.5 or 67. You can call it either one you want. Needs to get over 1776.5 to negate the downtrend. Can it begin an uptrend from this pattern? Not on the swing line. Even if you rally through it, you'd have a lower low, higher high. Now the difference here is momentum is pointing up, bias down. This chart's a mess. It's looking to see what the next step is going to be. In the copper market, you got to the upper Bollinger Band and 100-day average, ran out of steam, fell back to the 100-day average, and in the process broke the uptrend that had been in place. Here's the uptrend. Higher lows, I think you saw them there and there, into the resistance. I think the pros took money off here. The first challenge of the Bollinger Band, pulled back to that 18-day average. Now you're in no man's land, and I think you're still there, middle of no man's land. In the platinum market, you're oversold as can be. Oversold, not trying to make lower lows. Now, if it does, the 100-day average is your first support. If you were to get over 906.90, it'd be a sign that this downtrend has run its course on this leg of it at least, and maybe it's ready to do more. The problem, like in silver, because of the pattern, even if it did it, you'd have a lower low, higher high. I don't see that beginning an uptrend. Then we get to the palladium market, and now it's starting the weaken just a tad. It wants to make a run. That's what it looks like, trying to get back under the upper Bollinger Band. It still has the embedded reading. This rules the day. Until this number is, the red line falls under 80, the market will be, in my opinion at least, continue to be well supported under the Bollinger Band. I don't teach traders to buy over Bollinger Bands. And as for the dollar index, you can see it's helping the metals because it keeps falling. Hard to believe this market was just 99.30 and it's back down to 97.18. Very quietly, it is broken with higher U.S. interest rates going on. So something different than interest rates is working on this market. Could this be the shift where the euro is gaining on the dollar and we're getting that shift that so many traders have looked for so long? I'll know more about that come the weekend. Why? Brexit. You've got to go through Saturday. They're going to have a special session in Parliament. It could be a disappointment or it could be euphoria. I don't know which one to expect because I have no idea how Parliament's going to vote. The European Union has accepted Mr. Johnson's proposal. Now he's got to sell it at home, and it's not going to be an easy sell, so we'll see where that goes. You know, if you're a metals trader, one of the things that I like to look at is what do the seasonals look like? Now, what do I mean by seasonals? The Moore Research Center has databases going back 30 years plus. And what they do is they plot them out, and then they tell you, and you could break them down to bull years and bear years going back. What did the market do given certain months? Is there a time of the year, for example, do the jewelry people start buying gold now for the Christmas season? What's going on? Well, you get a pretty good insight as to what the seasonals are and what his history has shown by looking at this. And as I said, they break it down with interactive charts. You're able to see what it does. It's another tool. It is not, I don't care if they've had something that's worked every year. You don't go by that because the year you pick to do it is the year it won't work. Always use it in conjunction with your other tools and good money management. It's a tool. How do you get access to what I'm talking about? You can go to our website under free offers. Moore Research Center will get you a 2-week free offer to this. You can click up here. It'll take you to that page. Or you can do the easiest thing. Call my staff. They'll get you all set up. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.